In our previous discussions on Hurst cycles, we explored the foundational nature of cyclic theory and the predictive power of the FLD. However, even with a firm grasp of timing, traders often struggle with one critical question: when is a cyclic peak or trough actually confirmed? Standard trend lines are often subjective, arbitrary lines drawn across peaks that price frequently ignores. J.M. Hurst solved this by introducing the valid trend line, VTL. Unlike standard technical analysis, a VTL isn't just a line, it's a mathematically backed signal that a cycle of a specific magnitude has peaked or bottomed. Like the FLD, there is one VTL for every cycle. Before we dive into the cycles, please take a moment to review the financial disclaimer on your screen. This analysis is for educational purposes only. Let's start with the anatomy of the valid trend line, VTL. First, what is a VTL? A valid trend line is a specific line drawn between two, like points, either two troughs or two peaks, of a specific cycle. Its primary purpose is to confirm the crossing of a cycle. When price breaks a VTL, it provides a high probability signal that a cycle of the next larger magnitude has reached its peak or trough. Drawing a VTL requires identifying the phasing of the market. You cannot simply connect any 2 points. In the chart number 1, the VTL in an uptrend confirm a peak. To confirm that a peak of a specific cycle has occurred, we have to draw a VTL across the troughs. We first have to identify 2 consecutive troughs of the cycle you are analyzing, for example, the 20-day cycle. Then connect these 2 troughs with a straight line. The rule: when price breaks below this VTL, it confirms that the peak of the next larger cycle, for example the 40-day cycle, has occurred. Chart number 2, the VTL in a downtrend confirm a trough. To confirm that a trough of a specific cycle has occurred, we draw a VTL across the peaks. First, identify 2 consecutive peaks of the same cycle, for example the 20-day cycle. Connect these 2 peaks with a straight line. The rule: when price breaks above this VTL, it confirms that the trough of the next larger cycle, for example the 40-day cycle, has passed. The validity criteria: for a trend line to be valid, in Hurst's terms it must connect 2 points of the same cycle. It should not be intersected by price between the 2 points used to draw it. The angle of the VTL provides insight into the crates or underlying trend strength. Drawing a VTL isn't just about connecting dots, it's about understanding the principle of harmonicity. The mechanics of drawing a valid trend line. Drawing a VTL requires a phasing analysis already in place so that you can consult the spectral and phasing analysis post. You must know which troughs or peaks belong to which cycle, 20-day, 40-day, or 80-day. The VTL in an uptrend confirming a peak. We first have to identify the troughs. A VTL is only valid if it connects 2 consecutive points of the same magnitude. In the chart number 3, the green arrow identified the 20-day cycle. From the previous 98,240 low, we draw the 20-day VTL. The green line, meeting the first 20-day cycle low. The market crossed below the VTL at the blue arrow. The crossing confirmed the 123,236 high is the peak of the next longer cycle. Since the trough are part of the 20-day cycle, the next longer cycle is the 40-day cycle. With a very degree of confidence, we can label the 123,236 high as the 40-day peak. After identified the 40-day peak and the 40-day low, the blue arrow, we draw the 40-day VTL in blue from the 98,240 low to the 111,919 low, the 40-day low. At the purple arrow, the prices cross below the 40-day VTL, confirming the next longer cycle. The 80-day cycle formed a peak at the 124,517 high. Next step, you just need to identify the next 80-day low and draw the 80-day VTL to identify the 20-week cycle peak. Hurst have an important rule, the no intersections rule. Hurst was very strict about this. The line must be clean. Meaning when you draw the line from 2 points of the same cycle, the price action occurring between those 2 points must not cross the line. If the price dips below your line before reaching the second point of the cycle, that trend line is invalid. You must wait for the next clear cyclic point. Now let's see the VTL in a downtrend. For a downtrend, bullish VTL, you are looking for 2 consecutive peaks of a cycle to confirm the trough of the next larger cycle. A VTL is only valid if it connects 2 consecutive points of the same magnitude. For a downtrend VTL, Hurst have a very important rule. This rule applies only in the case of a valid downtrend line, and it does not apply for a valid uptrend line. A valid downtrend line must not be drawn from price highs between which there is a trough of a wave longer than the wave on which the valid downtrend line is based. Let's start first by drawing a valid VTL first. As mentioned above, the VTL in a downtrend VTL, confirming the troughs. First we have to identify the peaks. A VTL is only valid if it connects 2 consecutive high of the same magnitude. The chart number 5 illustrates a valid downtrend line. From the previous $25.93 high, we connect the $12.40 high by drawing the 12-month VTL, the white line. The $12.40 high is the 12-month cycle peak. This VTL is valid because the cycle low, the red arrow, between the both peak is the same degree, then the peaks, the next longer degree cycle form a low at 56 month. When the market cross above the VTL, this will confirm the next 17 and 56 month low. The no intersections rule also apply to the downtrend VTL. In order to don't make this video too long, for the non-valid downtrend VTL, I suggest to go my website tradingmarketcycles.com. I posted the link in the description below. After identified the peaks and troughs, we can calculate the magnitude of confirmation. This is where the VTL becomes a professional grade tool. The VTL confirms a turn in the next larger cycle in the nominal model. On the top left chart, a VTL drawn across 20-day troughs confirms the 40-day peak. On the right, a VTL drawn across 40-day troughs confirms the 80-day peak. On the bottom left, a VTL drawn across 40-day peaks confirms the 80-day trough. And finally on the bottom right, the VTL drawn across 80-day peaks confirms the 20-week trough. How can we use the trend line? A widely held belief has it that the longer and stronger a trend, the more likely it is to continue. Analyzing cycles indicate this is not entirely true. Strong trends tend to continue long, but the longer a trend has been in existence, the more likely it is to be reversed. In conventional charting techniques, a trend line break by prices signifies additional price movement in the direction of the break. This is quite often true, but can be disastrously wrong. Many different trends may be in effect at the same time, and the one trend reversal indicated by a trend line break can be easily overpowered by other trends. In dealing with the complex patterns of actual price motion, it is necessary to clarify what is meant by a trend line break. Any price penetration of the trend line, no matter how brief, is considered to be a trend line break. Thus, if the price bar for a given day dips down through an uptrend line by only a small amount of $1, and the price bars for subsequent days pull back above the trend line and do not penetrate it again, the trend line is nevertheless said to have been broken. In conclusion, the valid trend line is the bridge between cyclic theory and practical execution. It removes the guesswork from trend lines and replaces it with a rigorous framework based on the principle of harmonicity. By mastering the VTL, you aren't just drawing lines on a chart, you are mapping the DNA of market movement. By combining these lines with the FLD, you gain a multidimensional view of the market that standard indicators simply cannot match. Now, identifying a valid trend line is only half the battle. To truly master this, you need to understand how to spot an invalid downtrend VTL before it traps you in a bad trade. Because this requires a deep dive into the charts, I've put together a full technical breakdown on my website. I've included how to combine the VTL and FLD for high probability entries that I simply couldn't fit into this video. You can find the direct link in the description below, or just scan the QR code right here on the screen to jump straight to the guide. If this cyclic analysis helped you today, hit that like button, subscribe to join our trading community, and leave a comment below. Are you seeing a VTL break on your charts right now? Let's discuss it. See you on the website.